The Adani Group stocks, which are extending their gains right now at the high point of trade for Adani Ports as well, the top nifty gainer. And alongside that, we have, some of these banks also doing extremely well. SBI has been the top gainer all of today's trading session and is now extending that gains, moving towards that double-digit mark. A 9% up move is what we've seen on SBI. I don't remember the last time we saw a gain of that magnitude on SBI itself, with the stock actually, the company actually crossing a market cap of almost $100 billion. But we're also getting you conversations from the sidelines of the Bank of America Securities India conference. Our colleague Nigel has caught up with Peter, who's the head of APAC Investment Banking in Bank of America. Began by asking him about his outlook for India and the likely election verdict and what one should do with their investment portfolios. Listen in.
We have a major conference here, over 400 clients here, and it just shows the interest that people have, in India. And, look, you ask me, I believe that the next decade, is extremely exciting for India. Obviously, one of the fastest growing economies, I think assuming that you're right on, what the election polls are saying, I think people, love the continuity, that the countries have. I think the progress is very notable, especially infrastructure, the policies. I think also in the geopolitical world that we are, India is well placed to benefit, from a lot of the growth that we're going to see in the world, in Asia, but especially in India over the next decade.
All right, Peter, you're based out of Hong Kong, and out here in India, when we get a lot of our guests, we keep asking them, what do you think about this trade-off between India or China? But do you believe that there has to be a trade-off? Or, both have their strengths, both have their weaknesses. And, in fact, exposure to both could be warranted.
Look, absolutely. Look, first of all, I very much believe that, economic growth and opportunities is not a zero-sum game. I think especially if you look at Asia, I'm hugely bullish, for Asia as a whole. And different countries are at different parts of their cycle. I moved to Asia the first time 20 years ago, and at that point in time, China was at a very different point in their cycle than they are right now. And India today reminds me a lot of China 20 years ago. I do believe that the growth that we're going to see in India from the middle class, from the fact that you see that you're going to see industrialization on a scale that we haven't seen before will hugely benefit. I always use one one thing to compare countries. You look at it, and I think the US has something like 250 Apple stores. China has 50. Mike, if I'm correct, then India has 4 or 5, which all opened in the last 24 months. I think that's a very good way of looking at where you are in the cycle. But I do believe that both countries have huge opportunities and are, and will see continued investor interest, over the decades to come.
All right, talking about Asia, and as you said, you're quite positive on the prospects of the Asian markets on the whole. When you speak to investors, where is their preference leading? Between India, you have other markets like Korea, case in point. We're seeing a lot of inflows out there as well.
Yeah.
Could you take us?
I do think that India has, a very special place in a global scale at the moment because, you look at it, despite that valuations are clearly elevated, I think, the fact that, you're going to have a huge young well-educated population that is going to entering the workforce and then also entering hopefully over time you're going to see a growing middle class, which will lead to very strong domestic consumption.
Yeah.
Uniquely places India, because if you look at a lot of the markets in North Asia, be that Japan, which has done phenomenally well over recent years, Korea or China, the demographics are very, very different. If I compare India to Southeast Asia, which I think is going to be a huge beneficiary as well of some of the changes in supply chains, none of the countries has the scale that India has. And so from that perspective, I do very much believe that, I guess the next decade, and, I don't want to go much further than think about that, clearly I think will be India's decade in the sun.
Oh, that's encouraging to hear then. But Peter, let's focus a little bit on the developed markets as well.
Sure.
The US markets, well, we're seeing good growth out there. And those Fed rate hikes seem to have not really crushed the economy, so to call it, because everyone's waiting for a slowdown, which actually isn't coming. And some data points indicating that maybe, in fact, now the Fed could go ahead, and get their foot off the pedal, so to call it. How do you see the developed markets, whether it's the US markets or even Europe, which is still in a spot of bother?
Sure. Look, I think I learned over the last 25 years that I've been in this industry, never bet against the strengths of the U.S. economy. If there's one, economy that has consistently outperformed on scale, then it is the U.S. And that is, driven by the U.S. just never stops to innovate. I do think, and I've been, of that opinion, for quite a while, that you look at it and go that, we will see interest rates being higher for longer in the U.S. Why is that the case? If you look at it and say, what's the Fed's mandate? The Fed's mandate is to control inflation and to make sure that you are as close as possible to full employment. Right. Despite where rates are right now, the U.S. unemployment rate is still below 4%. So unless inflation comes down to 2.5%, the Fed, given their mandate, will not be in a position or not be willing to cut interest rate. And unfortunately, I think inflation is much stickier than what people forecasted, especially because a lot of the inflation that now is still around is actually, supply-driven and not demand-driven, so it will take a much longer time to get that out. But I think the U.S. is in a very good spot because the U.S. consumer, remains in a good spot. But we have to be careful and see, is because there are some cracks. I think Europe, from my perspective, is in a tougher spot. And I think from an investor perspective, I clearly think, investors do favor. From a developed market perspective, they either favor the US or, and as I said, I think Japan is a market where we see a lot of interest. And despite the very strong performance that the stock market had in Japan last year, we believe that this will continue because, Japan, the structural reforms that the country is going through, the changes, in the management style, they are something that is here to stay. And slightly biased because obviously, as I am in Asia, I believe that, Japan outbound activity both into the US, but also into Southeast Asia and India, will continue because Japanese companies need to look for where they can grow and buy growth.
Okay, well, the US is something you shouldn't go against when it comes to trends. That's the word coming in, and we'll get you more perspective as the day goes along. For the markets, holding very steady at this point in time. No complaints coming in. We'll take a short break, but on the other side, Manisha Gupta will join in. She's going to be discussing metals. Stay tuned.